We start off with a third day of losses on Wall Street. Major indices closing at session lows following the Fed's decision to lift rates by another quarter point. The Dow sliding 270 points. The S&P 500 and Nasdaq also closing in the red. The market taking a leg lower after Fed Chief Jerome Powell indicated that after 10 rate hikes in a row, there are no plans for rate cuts because of stubbornly high inflation. So if this is where the Fed pauses in its higher for longer scenario, then what's next for this market? Tim, what do you think?
Well, this was as expected. This is a Fed that's gone 10 straight times. Everyone knows these numbers. And you have a case where you've got a jobs market that's still stubbornly tight. We've had data this week that's actually been better than expected. And we have an economy that the Fed is kind of conceding light recession. Not a great environment for stocks. If you look at Fed fund futures, they don't believe the Fed. Market doesn't really seem to believe the Fed either. In other words, the market right now, I would say equities, even with a little pullback today, and it was, I was a little surprised at some of that. I guess parsing through the Fed statement, there was, some of it could have been a little bit more dovish on the cut here. But anyway, long story short, I just think that the market doesn't believe the Fed here, and pause does not mean pivot. And I think for equities, that's a problem.
The market doesn't believe the Fed because Jay Powell went out and he spoke to the world and didn't seem to have a lot of conviction or clarity about what's going on. And that seemed very clear. Jeffrey Gundlach of Double Line was on with Scott Wapner right afterwards, and he made that point. And it was something that I felt after listening to the Q&A. I know, but
Nobody
at some point,
does.
How could it?
I mean, okay, but markets don't like uncertainty. So to me, I'm actually very surprised the market wasn't down a lot more today. I think it will be down a lot more tomorrow. And if you think about just where, like, some of the readings that we have as it relates to volatility in the equity markets and the treasury markets, they are really just stuck here. And it seems very odd to me. But if you look at one indicator to me that I think is probably one of the most important, we talked about it last night, crude oil. I mean, you guys tell me what's going on. If that is not a reflection on expectations for growth, it's no longer a supply-demand story here. So I just think that some of the volatility that we've seen in the commodity markets, that we've seen in foreign exchange markets, I think it will work itself, obviously, and in the rate market, will work itself in the equities in very soon.
I thought you were going to say gold. It was either crude or
no,
gold.
that would be Guy, but
Steve.
So I think Steve Leisman asked a couple of good questions, and the other reporters asked a couple of good questions. Steve asked if the Fed knew that there was some sort of stress on the banks a month ago, why didn't that catch his attention? And he stuttered.
Yeah.
Then another reporter asked if in the beginning of the year you slowed down the pace to see what the lag effects would be, now you see them with the banks failing, why do you keep pushing on it at this point? So we have, 200 basis points in lag coming? Why wouldn't you just wait? So now you had 175 basis points into this meeting. Now you have 200 basis points of a lag coming along and variable lags. To me, it just seems as if any bank that fails from here going forward, he's wearing it.
And that's not even including the equivalent of rate hikes that will be credit tightening.
Yes.
Mark Zandy has pegged that as 2 to 3 rate hikes, so 75 basis points or so. So add that on top of the lag effects, and you've got a lot of tightening that's going to still be felt here. We are seeing headlines in the after hours, by the way. If we can show a chart of PacWest. This is a regional bank that has been under pressure in recent days. It is now almost cut in half in the after-hours session. This on reports that it is weighing strategic options, including a sale. This, according to Bloomberg. We're telling you this report because the stock is moving on the back of this. This is all part of the same story, though. And to your point, Steve, and to Steve Leeson's point, it was pretty much on the eve of a rate hike. He saw this, deck about SVB being in trouble in interest rate risk. And here we are again, even though everybody's saying the banking system is fine.
Well, a couple things to that. Why would he continue to raise? Because inflation is still really high. Right. And his mandate is maximum employment and stability. Well, the stability is still way out of whack. So things would have to break. So I sort of feel like I understand people think that the Fed is a sort of co-conspirator, but I feel like that was their job. They had to do this. Where they really screwed up to me was 2018, where they didn't start. That was the time. They should have started raising then. Anyway, that's out of here. This, you and I were talking right before the show started. I was wondering, why would PacWest say this? Why wouldn't you do this in private? And you were saying maybe it wasn't them that said this.
Right.
It's other sources saying this. this is very bad for them. In a different environment, strategic alternatives is a great thing, right? You hope you want to stop. Exactly. This hurts value because if you're a customer of the bank, that's not a great thing you want to read. So clearly, there will be collateral damage in the space tomorrow.
And PacWest had just given an update recently, and they talked about how their deposits were up 6% from that March period to the April period, that their CET ratio is over 10%. So you had a message that, like a week ago wasn't that bad and was a sign of improvements. And forget net interest margins. We know where they were going to go. But the balance sheet, the deposit base, and that should make everybody think twice about all of these regional banks. And that's what this kind of an announcement does.